Hey, everybody. It has been kind of a turbulent couple of weeks for the market. Not only has a lot of economic data, like the jobs report, looked significantly softer than expected, but we're also seeing tariffs go into effect. There's a lot of uncertainty surrounding that. And the major market averages are well off their all time highs. In fact, the NASDAQ just entered a correction a couple of days before I'm recording this on March the 6th. So, as a result, some stocks have recently gone on sale. So I'm going to talk about five of them in particular that are down recently that I think are great bargains right now. I own four out of the five, and I'll tell you which one I don't own yet in my own portfolio. Before we dive in, please take a minute and check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now from the Motley Fool. It is the best way to support this work I'm doing on YouTube. Again, fool.com/Frankel, and stay tuned after this video for a message from the Motley Fool. So let me go ahead and share my screen. And in no particular order, here are the stocks that I think are real bargains right now. So the first one is Advanced Micro Devices, which is better known by its ticker symbol AMD. They are kind of overlooked in a lot of ways because of NVIDIA's dominance in the data center space, in the GPU space, but they do have a very impressive business themselves. Not a dividend stock, but that's okay. They make chips for a few different markets. There's four different business segments. There's the data center space where they make GPUs and other types of processors. That's the area NVIDIA dominates, but AMD does have a pretty impressive data center business. NVIDIA is so big that even the distant number two can be okay. They have an impressive consumer business. Pretty much every PC or laptop made in or sold in the USA has a CPU made by either AMD or NVIDIA, and AMD has done a great job of gaining market share in recent years. They make chips for autonomous vehicles, for gaming devices, things like that. The stock is down 55% from its highs, even though it's growing pretty rapidly and trades for just 22 times forward earnings. I think this one could end up being an absolute steal at the current levels. And this is the one that I don't own yet, but it is at the top of my watch list. As soon as I can stop talking about it for a few days, I'm going to pull the trigger and buy some shares. But I can tell you right now, this is one that will be in my portfolio before too long. It's just a matter of time. It could be a couple days, a couple weeks, but I will buy this stock. I own all four of the rest of these already, but they all went on sale recently. GM is a tariff play, or it was beaten down by tariffs. It's not the only reason to buy it. It's come back a little bit when they announced the 1 month delay in automaker tariffs. Ticker symbol is GM. It does pay a dividend, not a great one, but 1%. That's not the best use of capital for them right now. They are a leading, quote, legacy automaker. I put that in quotes because they have done a great job of building out their EV business. They actually recently became the number 2 EV seller in the United States next to Tesla, which nobody's going to catch them anytime soon. They got rid of their robo-taxi business in their cruise division. That is definitely a positive for profitability because they were hemorrhaging over $1 billion a year on that. And their automation technology is pretty solid. They're just going to use it for their own vehicles. Could be a beneficiary of falling rates. New car sales generally pick up when interest rates are lower. Like I said, great EV progress so far, and they're buying back stock hand over fist. They just announced a new $6 billion buyback. That's not a typo. They're trading for just over 4 times forward earnings. This could be a bargain. It's not without risk, and it could see profit margins erode if tariffs do end up taking effect and affecting their business. But for now, it's a pretty cheap stock. PayPal is one that plunged after earnings. It was mildly disappointing, but not enough that it should be down nearly 25% from its recent high. A lot of the initiatives its new management team are doing are not in the numbers yet. They just had an investor day. They made some pretty bold projections that they want to accelerate their earnings to a 20% plus annualized rate over the long term. If they can do that, the stock is an absolute bargain, but no one seems to believe they can. Have a lot of promising growth initiatives. I mentioned their ad platform before, which just launched in October and has a lot of potential. They correctly identified Venmo as one of their opportunities. It's not nearly monetized as well as PayPal's core product, it's a very profitable company. They're pretty much spending all of their free cash flow on buybacks, and there's a lot of free cash flow. So I could see this one being a really, really good stock to pick up on the cheap right now. I've recently added shares to my position and plan to continue doing so as long as these prices hold out. Another one, Alphabet, or better known for Google. There's two ticker symbols there. If you're curious, the one with an L on the end is the Class A shares. That's the one that has voting rights. It doesn't really matter for investors like you or I. Both of them represent the same exact economic interest in the company. One has voting rights, one does not. Um, Google actually started, or Alphabet started paying a dividend. It's 0.5%, but it's first time ever it's paid a dividend. So that could rise significantly. This is a very, very profitable business. I can see that dividend getting much higher in the future. It's like all the Magnificent Seven stocks, it's pulled back significantly lately. I mentioned the Nasdaq's in correction. Alphabet's down 17% from the highs and actually trades for less than 20 times earnings, which is really rare for one of these big tech companies right now. The potential of the Google Cloud business is still massive, and then it has that very profitable, it's called the Google Services division that has the search, the Gmail, YouTube, all different kinds of. Those are they're not that mature, but the Google Cloud definitely has more growth potential. Very profitable business and one that looks really attractive right now. If you missed out on that, while the Magnificent Seven were kind of soaring, this could be a second chance. And last but certainly not least, Ryman Hospitality Properties. Ticker symbol is RHP, down about 20% from its recent high, 5% dividend yield. And to be fair, it's down for a reason. In the company's recent earnings report, they reported soft holiday demand. They are some of the biggest. They own some of the biggest group-focused hotels under the Gaylord brand, if you're familiar with those. And those generally have big holiday gatherings. They have the ice attractions and things like that. So they said demand was a little bit soft, but this is still a very, very profitable business. Their average daily room rates for future nights are higher than they've ever been. They're booking millions of nights several years out, and they're investing heavily in their properties. And I think this could pay off tremendously. Not going to be a double or a triple overnight, but this is one that could be a very nice compounder over the long term, and one that I own in my retirement account actually. So those are my five dividend stocks to buy, my five stocks to buy on sale right now. Not all dividend stocks. I'd love to know what you think of them. Which one is your favorite out of the five? Are there any that you think I'm overlooking? I'll do my best to respond to any comments or questions you might have individually. And please stay tuned for a message from my sponsor, The Motley Fool. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investments. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market more than 5 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 914% as of January 7th, 2025, and are measured against the S&P 500 returns of 174% as of January 7th, 2025.